So when I look at businesses, I am what you call a cash flow buyer, which inherently means that you have to be profitable. I don't deal with turnarounds. I am buying businesses that are profitable because I want to use the profits of the business to pay for it, pay for the acquisition largely.
Welcome to the Profit Answer Man podcast. We believe the purpose of business is to make lots of money. We'll show you how to scale and grow your profit and cash flow, all while working less. We're a big fan of the ELF model: easy, lucrative, and fun. If you're the backbone of America, you deserve to be well rewarded for that. Listen in to see how other business owners are doing it and how to maximize your profit and cash flow. Welcome to the Profit Answer Man, David Hori. It's great to have you join us today.
Rocky, thank you so much for having me.
I'm excited to learn from you. Can you share a little bit about yourself and your business?
Yes. So I guess to package up the last 10 years, the most recent 10 years, I am a recovering startup junkie who had the ability, or I guess the good blessing, to have been partnered with multiple founders who were visionaries, and I got to help them build and scale their companies. And all three of those founders in the last 5 years have exited. And what I found is that, man, I think it's time for me to start building for myself now. And so now I'm in a space where I am in the business of buying businesses. And that led me to found Top Line Operators. And the primary focus is business acquisition, although I do work with some business owners to help them grow their business in a really sustainable way without killing themselves.
That is what we're all about. That's the
I
way
love it.
people go into business to make money and have freedom.
Mhm.
And yet, a lot of them don't make money and have freedom. And that's what we're going to fix today, among
I love
other
it.
things. Before we get there, profit first. You use it in your business.
I do. And
What
actually,
prompted you?
yeah. So I was at an M&A conference in Orlando, and one of the big main stage sponsors was this wealth advisory, and they were talking about profit first. And the guy sitting next to me leaned over. He's like, "Hey, have you read this book?" And I was like, "I've never even heard of it." And he's like, "You should look into this because this is legit." And I was like, "Well, if you say it's legit and these guys standing on stage say it's legit, I better go and read this." And I did. And this, founding Top Line Operators was my first chance to implement it. And it has been such a tremendously powerful approach to managing money, to start with the end in mind and ensure that I'm going to get paid, ensure that there's money set aside for taxes so there's no panic later on. And it was just a strike of fortune that I found out about.
You know what I find? It's so simple and it's so easy, and yet people just won't do it.
Mhm.
And I don't know why, but it's literally the way everyone should run their business. People think, does a big business use profit first? Here's the thing. If you're a Fortune 500, you have something called treasury management. That is a fancy word for profit first. They set up bank accounts for all this stuff and they put money aside into them.
Yeah. Well, one thing I'll just share this. In founding my business, I assumed that every bank could support profit first. And not every bank. In fact, some really well-known ones cannot. And so I set up a bank account just with this one's good for small businesses, and I actually had to shut it down because I knew I wanted to do profit first and spin up another. And I assumed that every bank could, and it's not true.
What, they just won't let you set up multiple bank accounts, or they charge, or?
Yeah, there was fees associated with transferring money back and forth, and they weren't all connected. So it was a matter of, days often instead of instantaneous, even though they were all linked.
That's called how we get to keep your money and make money off of it while you don't.
Exactly.
That's just a bad bank to work with, period.
Agreed.
That's what it comes down to. And more often than not, we may not even look into the bank that we deal with. But there are tons of ways around that. For smaller, Relay is wonderful. We talk about them. In today's world, there's enough good banks that you don't have to worry about it. You just have to make sure they're cool and life goes on.
Agreed.
So these days you go out, you buy businesses. So you're obviously looking for something. And on the other side of that thing is what drives the value of a business, right?
Mhm.
And those things kind of go together. And of course, you also have my other favorite subject, EOS. So we'll just kind of throw that all out there and let you take it from here.
Sure. Yes. So when I look at businesses, I am what you call a cash flow buyer, which inherently means that you have to be profitable. I don't deal with turnarounds. I am buying businesses that are profitable because I want to use the profits of the business to pay for it, pay for the acquisition largely. And so the value of profit, whether you measure it in SDE, which is seller discretionary earnings, or EBITDA, it doesn't really matter to me. I'm looking at how much of your profit I can use to pay for the business. And then how much money do I have to go and bring to the table myself, or from institutional lenders, or from private investors.
And I don't think people realize how much that free cash flow is what drives the value of the business. Because at the end of the day, if I'm going to go buy a business, and I'm just going to make up simple numbers, and I'm going to pay $1 million for it, not only do I have to make money on the $1 million, meaning if I'm going to go work there, I expect to get paid, but I also have to pay off the note that I used to buy the $1 million business. So whatever that business sells for is irrelevant, but let's just say it sold for the $1 million. So that business now needs to pay enough that I can, in a reasonable amount of time, pay that $1 million note off and still make money. And if I can't do both, I'm not buying that business.
I would take it a step further, pay the note, pay myself, and still grow the business. Because you get into a cash flow problem of, gosh, I would love to grow, but I can't make the capital investment to do so. So yeah, it's very, very important.
And all of those things come together. And I think too often when people go to sell a business, they look at it from their viewpoint. And if you're not looking at it from the other viewpoint of the buyer, the reality is if they can't afford it, they can't buy it. And the only way they can afford it is if it pays for themselves, because there aren't too many buyers out there who want to buy something and lose money on it. Just my guess.
It's true. Yeah. And I think a lot of people that are business owners looking to sell, they're told by a number of different intermediaries, business brokers, investment bankers, that they got to target some kind of magic multiple. And that's like kind of the measuring stick for, did you exit well? Is it a 2x multiple, a 3x multiple, et cetera, 10x? I don't care about multiples. I will give you a 2x multiple if your profitability supports that. So like the multiple is kind of an ancillary, I think, number that a lot of people focus in on, that, again, I don't care as long as the cash flow supports it. I want to give you as much money as possible without jeopardizing my ability to pay for the company and grow it.
No, that makes sense. So what have you found makes companies have great cash flow?
There are a few things. One of those, though, is you have to be in a place where you own either vertically production, or you're in a place of exclusivity. Those are two things that are characteristics around a lot of the businesses I look at, where I have exclusive maybe distribution rights to this product, or I can manufacture the product and sell it direct to consumer. You're removing friction and middle layers that often eat profit margin up. And those are tremendously valuable to me. And then again, just a best practice, business owners and leaders who are regularly checking back and looking to refine their processes. They're going back and talking to vendors and renegotiating terms. They're going back and looking at, are there things that we're selling already that we could bundle? Like those kinds of good hygiene practices are really critical to ensuring consistent profitability in the long run.
When you go to look at businesses, what's your hit ratio? And what I mean by that is, how many businesses do you actually have to look at before you find one you want to buy?
I will say the short answer is it depends if it's on market or off market. Off market being that I'm going directly to a business owner, whether they've expressed an interest in selling their business or not, and starting a conversation with them about buying their business. On market is they've probably gone and solicited the help of a business broker, and it's listed publicly online, and there's a lot of other people vying for that business. And like off market, I would say probably 10 to 12 conversations I have with an owner yield an offer. It's much higher if you're on market.
And I guess maybe I should have refined the question, because in order for you to look at it, especially on market, you're probably looking for certain characteristics before you even talk to them.
Absolutely.
And that's what I'm trying to figure out. If you looked at all businesses for sale, like if I, versus how many you'd be interested in because of the numbers, what would that look like?
Wow. I mean, I am looking at such a tiny percentage of the businesses out there. And I think a stat that might help your listeners frame kind of the context here is if you Google right now, how many businesses in the US are for sale that actually sell? Especially the small businesses, the numbers are abysmal. Only 20 to 30% that are listed that are, often it's not even like, is the problem profitability? You could be profitable and for sale, and most of those businesses will not sell. And certainly I'm looking at a sliver of the percentage of those businesses that do sell.
And I
Does
think
that answer
that's
your
the
question?
It did. I don't think people realize that the majority of businesses don't sell. And the
Mhm.
numbers are, as you said, abysmal. And you're looking for a certain characteristic, which is that they cash flow, which not every buyer is smart enough to do. And so if you can find a buyer that doesn't understand finance, you have a better shot at selling. But usually that same buyer is going to want you to finance it because the bank knows that they're not financing that deal. So you're back at the risk situation that the buyer may screw up your business and hand it back to you in a few years.
Mhm.
And
Yeah.
that does happen.
It does. It absolutely does. And it doesn't just happen with Main Street buyers. I was talking to a business owner named Mike just a couple weeks ago who sold to private equity. Same thing. They essentially just extracted all the cash flow from the business and left him with this dried out husk of a company that he was a week away from filing bankruptcy before he was able to get them to sign back control of his business so that they weren't able to keep bleeding it dry. And now he's in rebuild mode. So it happens across, Main Street buyers, private equity, all of them.
I'm surprised he signed a deal with private equity that didn't just pay him straight out, or I guess he was still on the hook for some reason. Because I would have said, give me my money, because that's what they're going to do. They're going to bleed the company. They don't care. And so you better be prepared for it.
They did a masterful job of selling him this vision. Their mantra the whole way through the sales process was like, you don't want to just retire and walk on the beach. You want to build on the beach. We're going to give you this big cash out, and it's going to be this, they painted an amazing vision, but they didn't deliver. And, private equity is very well positioned to structure the buyout so that you are retained for a certain period of time. And a large part of your payout is tied to continued business profitability.
And if they control it, they can extract all the money and you no longer have the power to do anything. If you think it only happens sometimes, there's this guy by the name of Steve Jobs who was actually kicked out of Apple at one point. Michael Dell was kicked out of Dell. It doesn't matter how big or small you are, it happens. And you got to be prepared for that. And we see it all the time, more often than not, because they are ruthless in results. And if you don't provide them, they'll kick you out of your own company. So be careful what you wish for.
Absolutely.
So you took businesses and you helped them scale and exit too in your past. What was it that you brought to the table? And I'm guessing a lot of it is the EOS philosophy that helped them to do that.
Yeah. Unfortunately, I'm not the sharpest crayon in the box because I didn't read traction prior to going and building businesses for other people, for visionaries, right? I had no idea what the integrator role was. It wasn't until after I built these companies that I was like, oh, so that's what I've been doing, through trial and error. And it was all documented in a book and proven out over millions of other business owners. What I brought to the table, I started, my roots was in, what's traditionally associated with human resources. So I'm really good at creating systems and processes for people to follow, and not just like the elite purple squirrel unicorn that you manage to hire and only they can run it for your business, but very average people is, I think, the strength of what I bring. And so hiring people for that initial team once there was this idea and funding, and then putting in place systems and processes that enabled rapid scaling and hiring people underneath those key leaders was what I did 3 times over.
How do you get people to follow the processes? Because that's the one thing I struggle with.
I think the biggest part of my role is incentive alignment. It's not just about getting the right people on the bus and in the right seats, but then it's also aligning incentives around them so that their success is tied to the business success and they're going to experience the benefits that they want to and are drivers and motivators for them if they follow the process.
So is everyone getting incentivized? in the
In the
company or certain roles, or how do you look at that?
If you could build the perfect company, the short answer is yes. Everybody is incentivized from the CEO or the founder on down. Their leadership, they are tied. Their success is tied to business outcomes that are mutually agreed upon and yield the results that drive growth, that drive profitability. And that can be a moving target, right? You never set it and forget it, but you're understanding like, what do I need delivered? How do I incentivize this person to deliver that? And developing that in a collaborative way that's tied to their ultimate compensation in some way or other development. It's not just money.
Well, that was my question, because not everyone's motivated by money, which shocks me, but okay. What are you doing for those types of people where money isn't necessarily the motivator?
This starts at the talent acquisition phase, where every candidate I'm speaking with, most of my interview was really mapping movers and motivators. What have you done the last 10 years? Okay, what did you like best and what did you like least? And then ultimately, why did you leave? If you like establish those data points 3 or 4 times over, you get a really clear sense of what they're trying to get away from and what drives them crazy and what they're going to be really engaged by. And then I'm deciding there, is there a reasonable opportunity for me to engage those things, those movers and motivators and drivers? And if they're saying, I want to manage a big team and I know that this is an individual contribution role, I'm not going to try to sell them on it. And if they say, I don't want to manage people, it's a huge headache, and that was the only way I could make more money in my previous company, great, we've got the perfect role for you. I can guarantee you're never going to have to manage another person, So it's just about, again, us aligning incentives and then transparently communicating that.
How much is culture and value fit matter to you versus the ability to do the work?
You have to start with the ability to do the work. You see this trap a lot, I think, especially when you're scaling really quickly. The person that got you your first 100 customers is not going to probably be the person that gets you the next 5,000, right? And so, but you feel like you should be loyal to them because they're a great culture fit, right? Wrong. They have to deliver the outcomes that you need them to.
Right,
Go ahead.
but that's after you hired them, right?
Mm-hmm.
Well, what
So
about before, like as you're hiring people, if you found somebody who had the right talents but a bad culture fit, does that bother you or no?
every founder's different. I would argue, though, that is an absolute deal breaker, not a culture fit. And when I say culture fit, I'm really talking about kind of values alignment. If we value customer service and they're crabby with customers, even if they get the ultimate results of retaining customers because they just are always have the answer, they always connect you with the solution, and they're very consistent in that, it is less important than making sure that our customers feel heard, seen, appreciated, cared for. I would say that values alignment is foundational.
Do you find enough businesses know their values and then take the time to hire to it?
Such a good question, Rocky. I love it.
I mean, you're buying these businesses. So if you bought a business, you're like, hey, this is the people I inherited. This is the culture I inherited. Now what?
What I find is the culture that you buy or inherit is very different from the one that the founder is going to say that they have. And what I've found is like that when you talk to a founder or a business owner, what they're telling you is largely aspirational. They want to be generous or they want to be innovative or they want to be, agile, when in practice, the reality is very different.
No, and I get that. That's why I always say if you're going to buy a business, sneak in one day. And what I mean by sneak in is go in as an outsider and experience the business as a customer or a potential customer
Absolutely.
and see what happens, because that will tell you the truth of what you're buying and what you're walking into. And people will tell you more than you can imagine if you're nice to them. They'll tell you whether they love the place, hate the place. I did a post on LinkedIn the other day. I was at the gym and my trainer was covering the front desk for like 2 minutes because the person had to go run to the bathroom. I'm like, no big deal. I go, when I go over to the other place, there's never anyone at the desk anyway. I said, it's because they can't find people. And when the person came back, she's like, well, are they paying better? Because I'll go. And I'm like, wow, there's a culture misfit, right? And this place has a better culture, but you've got a person here who doesn't get it. And I'm like, not a good fit, not good training, something we got to work on.
Yeah. And in those cases, there are people that are purely money motivated, and they will, regardless of the culture that you've created and all the incentives being in place for them to develop professionally, are going to chase $1 an hour more. And the best thing you can do is help them transition then. I'll literally go and call up my competitor and say, like, hey, you should go talk to Paul because he is great and he's going to leave me for $1 an hour more. So you should snap him up.
That works. When you go into these businesses and you buy them, I'm assuming you're going to improve them and grow them, correct? When you walk in, what are some of the first things you look for to improve?
I'm developing that thesis from the first conversation I have with an owner, although it does need to be validated post-close. A lot of those things are going to be, again, systems and processes. I'm talking to a business owner right now. I gave him an offer before Christmas. So at the time of this recording, 2 or 3 months ago. And, he's like, well, what should I be doing right now as we're like, starting to work towards this, start documenting the processes that live inside your head and get it out on paper, because like that's really only the way I can really optimize them. So getting those things documented or systematized. Then technology. What systems are missing that can automate this or create, again, repeatability? That's what really is powerful, is, again, the idea that it's repeatable profits, consistent profits. And then certainly post-close, you're looking at the team. Can they deliver the outcomes that support the next version of the company? Yes or no? And can we create a plan around them?
Do you usually have to shift a lot of people or move people out?
The short answer, I think, really hinges on the degree that business has hired people that embrace change or not. If you have hired a bunch of people that want to know exactly what to expect and it never changes and it shows up, which there's value in hiring those people, you're going to have a lot of turnover, voluntary and involuntary, when you start making changes. Because ultimately, again, what got you to 3 million in revenue is not going to take you to 5 million in revenue. You're going to have to, and it's not going to be incremental changes that gets you there. It's a new playbook. So people, especially sales, this is the hardest one. Sales is really hard because they found a really great, efficient way at making their numbers and closing people. And if you change that, you almost have to turn over the sales team. But there are places, Zulily was one that was famous, was like, don't get comfortable. In fact, we're going to move you to a physical different location in your whole desk every few months so you don't get comfortable, right? Like, then I would expect turnover to be a lot lower.
Has AI helped you in bringing about a lot of these changes, or automating or integrating into the companies?
I use AI every day. I mean, next to probably email, it's like the next tool that I use the most if I were going to look at kind of a log of what I'm using. And it's additive in every sense, whether I'm dumping in some financials and getting some like quick reactions to like, tell me what, I've trained it to show me like, what's the revenue, what's the COGS, expenses, bottom line, what's the general trend, is margins growing, compressing, etc. Whether it's sending out and editing my social media posts, right? Like dumping videos like this into it and having it splice it. I mean, like every aspect of my business is enhanced by it. And for a lot of the acquisition targets, that's going to be an early investment. One of the things that is kind of an automatic for especially any business that relies on customers finding you via Google search is investing in an AI voice agent to answer the phone. The dollar figure associated with missing a single phone call and how much it costs you to employ a real human to make sure that you never miss a real phone call is automatic. You should implement a voice AI agent, and it's not going to ever replace human interaction, but you can have it do some very, very basic things like answer the phone, get their contact information, and then let them know, hey, actually, based on what you've shared, we're going to escalate this to a subject matter expert, and he's going to call you back in the next hour. You're off and running.
And those are the keys. Speed to answer in today's world is extremely important. And so that's kind of the key. When you go into businesses, how many of them do you see are using AI to the level you are or anywhere close to it?
I have yet to see one.
Okay. So most people aren't actively engaging.
No. They're curious. There are an increasing number that are open. It used to be there was a point of pride. They'd put it on their website, like no AI, right? And now they're starting to see the benefits. They're open to it. They're asking like, what should I do? And you don't have to dig very deep to find, 10 different ways that AI could be implemented. And it doesn't have to be a complete overhaul of your tech stack or your process just to get the benefits.
No, you can just start with, like you said, emails, policies and procedures, even what to do about something or ideas to think through something. There's a million things that you can do with. We've been using it more and more across the board. There are parts that it's okay at. There are parts where the way I explain this best is if Tiger Woods showed up to help me with my golf game, it really wouldn't make a damn bit of difference. Okay. Because I'm just not a golfer. It's not going to help me. AI is kind of like that. Whatever you show up with, that's where it's going to meet you. And if you show up like Tiger Woods, AI is going to give you Tiger Woods. But you have to know enough to interrogate it. So when I go in and, like the other day, I had to build a financial sheet for someone, and I told it what to do, and it did it wrong. And I caught a lot of errors. And so then I went back and said, here are the errors. Here are the things you need to fix. Here's the things that I'm trying to accomplish that you're not understanding. And then it gave it to me again. And it was still wrong. But I knew it was wrong because I had the expertise to know that's not the correct answer. Cells are not correctly aligning. And so we went back and forth 3 or 4 times. Then I took the product and then I polished it. Mm-hmm. But had I not known that and I took the first version, I'd be in major trouble. So you have to be able to still be smart enough to interact with it. I don't know if that's what you found. Just in our conversation, I can tell that you know how to have those interactions.
The opposite of the business owner that sees AI as the ultimate evil and they'll never adopt it is the person that sees AI as the silver bullet that solves all of the problems. And, Ben Horowitz was one of our investors and board members in one of those startups. He said, there are no silver bullets. There are only lead bullets. You have to knock down those problems one at a time. And so if you are looking to implement AI because I hate sales, I hate picking up the phone, I'm uncomfortable with it, I'm not very good at it. You implement AI because they've got a chat feature that is going to close customers. It's not going to deliver the results you're hoping. You have to understand, why am I getting rejected? Why am I not closing these people? What are their objections and how do I handle them? And put that into the AI model to have something really powerful, because you can absolutely have an AI do your sales for you, or 80% of it, but you garbage in, garbage out. Absolutely.
And that's what I found. It goes back to the early days of computers, garbage in, garbage out, and that's what we found. Looking at playbooks, you mentioned that as you go through each level, you got to keep changing your playbooks. And what I found is, unless you've done this once, I don't think most business owners even realize there's different playbooks. A lot of them are just like, I just need more revenue. That'll solve everything. I'm like, no, it won't. And I think there's also certain points where those playbooks change. Like that 2 to 3 million mark is a change, probably in that 5 to 7, and then 10 to maybe 25. So you got to kind of know where those different marks are. And this playbook worked here. This playbook doesn't work anymore. What have you found?
100% agree. One of the people that I looked at initially buying the business and then ultimately concluded, hey, I think there's an opportunity for maybe me to just help you, because you have ideas, you got gas in the tank, you actually don't want to sell yet, but yet you've never broken the $3 million threshold of revenue. You need a new playbook. He was trying to optimize his way past it, and there's diminishing returns the more fine-tuned your systems and processes and people became. And he did a really good job at that, but he was never going to break past that threshold without a new playbook. And one of the things, that I can take a bird's eye view on, I was like, hey, you've got this revenue stream here that's barely, if it is paying for itself, barely paying for itself. Automatically, you either have a plan to 3x the revenue on that, or you cut it tomorrow. Done. Like that, you can go in and make some really tactical changes immediately that are going to put you in a better position. What could that person that's running that program do? How could you repurpose them? If you just got rid of this thing that's just kind of adding friction to everything and slogging down your business. So yeah, there's absolutely playbooks that map to different levels and tiers. And again, the team that can run that playbook.
And the team may have to change too.
Almost certainly.
Yeah. So different playbook, different team. And I think that's important for people to know and to be able to do it. And it sounds like you're very comfortable with the finances too.
I mean, hopefully I've fooled you because I would consider that my Achilles heel, but I've had to. There's no way of getting around finances and accounting and getting into the numbers when you're looking at buying businesses. But I could actually surround myself with people much smarter than that help me a lot.
There you go. But at the end of the day, you've got to understand all these pieces or find the who can do it for you. Because if you can't, someone's got to, or you're going to get yourself in trouble. If people would like to reach out to you, learn more about you, how do they do that?
I am super active on Instagram and LinkedIn. And so you can look for me. Again, my company is Topline Operators, and everywhere on social media, I am Topline Ops. Topline OPS. And yeah, if you give me a follow, shoot me a message. I'm happy to help you and connect.
Cool. We'll make sure to put that in the show notes. Thank you so much for joining us today.
Rocky, thank you so much for having me. Appreciate you.
Thanks for listening to this unedited video of the Profit Answer Man podcast. If you'd like to catch the full episode and learn more about what we do, check us out at profitcomesfirst.com. We also go through the Profit First book in each and every chapter in the beginning episodes of the podcast, so check those out as well. Thanks for listening, and here's to you having a more profitable and growing business.